Cash out refinance strategy for investors. Turn equity into opportunity. And if you're a real estate investor, your biggest asset isn't just your property, but it's also the equity that's built in it. And most investors think they need to save more cash to grow, and that's the wrong mindset. Smart investors recycle capital. And one of the most powerful ways to do that is through a cash out refinance. So, what is a cash out refinance? Well, a cash out refinance is essentially replacing your existing mortgage with a new, larger loan, which allows you to pull out the difference in cash. So let's give you an example here. Say you have a property that's valued at, say, $500,000, and you have a $250,000 loan on it. But you can get a new loan at 75% of the value for $375,000, and you have cash out of $125,000. And that $125,000 becomes fuel for your next deal. So why investors consider cash out refinancing? Well, a properly structured cash out refinance allows you to access tax advantage capital without selling a property, but also scale your portfolio faster. And it can help fund renovations or BRRRR strategies. So the point is recycle equity without resetting your entire portfolio. Or you can even consolidate higher interest rate debt. Bottom line there is you're turning trapped equity into deployable capital. So the real strategy here is that structure is more important than rate, and most investors focus on rate, and that's amateur thinking. Professional investors focus on structure. So you look at your amortization, 30 years versus an interest only. What are the prepayment penalties? Is it a DSCR loan or a full doc qualifying? What's my exit strategy? Am I to refi or am I to sell? And a slightly higher rate with better flexibility can make you significantly more money long term. So when does a cash out refinance make sense? Well, you should consider a cash out refinance when your property's appreciated significantly and you've increased NOI through rent growth or improvements. Or if you want to avoid triggering capital gains taxes by selling. That way you have a clear reinvestment plan with those funds, and you're transitioning from short-term to long-term financing is another category. But when it doesn't make sense, a cash-out refinance can hurt you if you're already over-leveraged and you kill your debt service coverage ratio, or you don't have a direct plan for the capital, or if you're pulling equity at peak valuation without any downside protection. So that means if you're ignoring lender adjustments for taxes, insurance, or vacancy. And lenders underwrite reality and not your pro forma. So some key metrics lenders care about. And to qualify, lenders are going to focus on your debt service coverage ratio, or DSCR. And loan to value ratios for cash out transactions are typically 70 to 75% for investors. And we need to show cash reserves and liquidity. But your property cash flow and rent comps also have to be there, and borrower experience and credit profile must align. So if your DSCR gets tight, your deal could die. It's just as simple as that. But let's talk about advanced investor strategy, the BRRRR loop. Cash out refinancing is the backbone of the BRRRR strategy. So buy, rehab, rent, refinance, repeat. You recover your capital after stabilization and then get to redeploy it into your next deal. And this is how investors go from one property to 10 plus properties. So here's the Texas investor insight for Houston, Katy, and Fulshire. And in high growth markets like Houston, Katy, and Fulshire, we have population growth, which drives rents higher. We have new development, which creates forced appreciation opportunities. But we also have strong demand and stable refinance options. So this creates the ideal conditions for cash out refinance strategies to scale portfolios quickly is my point. So work with a broker who thinks like an investor. And at Medallion Funds, we don't just get loans approved, we structure deals. We help investors match deals to the right lenders. We have a little over 600 options at our disposal, and we can optimize your leverage without killing your cash flow. That way we can align financing with your long-term strategy. And the goal isn't just to refinance. The goal is to build a scalable portfolio. Final thought for the day is you don't just build wealth by saving money, you build wealth by deploying capital intelligently. So a cash out refinance, when done right, is one of the most powerful tools in your arsenal. That, my friends, is it for the day. Please visit my website, BillRappOnline.com. You can figure out how to schedule a call. Love to have a conversation with you. Have a good day.